If you're serious about protecting your wealth and understanding where markets are truly heading, then stay with us until the very end of this video. The signs are everywhere, but most people simply aren't paying attention. What we're about to reveal may reshape how you see gold, silver, and the global financial system. So before we begin, take a moment to subscribe to our channel and turn on notifications. We're here to bring you the real story, unfiltered, unbiased, and grounded in hard analysis. You won't want to miss what's coming next. It starts with something subtle, barely noticed by the mainstream press. But beneath the surface, gold has been quietly building strength. From a technical standpoint, it's clear gold is not only in an uptrend, but it remains firmly anchored in a long-term bull market. And according to expert market strategist Chris Vermeulen, this is no ordinary rally. It's a consolidation phase, a pause before a potentially massive breakout. Gold is trading near all-time highs, and yet the general public is distracted, drawn to risky growth stocks and digital trends while ignoring one of the most reliable safe haven assets in history. What's fascinating is how gold has behaved during recent global chaos. Despite war, despite geopolitical flare-ups, despite market fear, gold hasn't reacted with the kind of violent upward spike one might expect. Instead, it has shown something even more powerful: quiet resilience. It hasn't collapsed. It hasn't been shaken. It's holding the line, consolidating, waiting. And Vermeulen believes the next upside target is a staggering $3,750 per ounce. But that's not all. Silver, often seen as gold's more volatile cousin, is also flashing signals that demand our attention. While gold consolidates, silver has started to come alive, now hovering near $36.35 and aiming for a historic resistance point at $38, a level not seen since the explosive rally of 2011 and 2012. If gold continues to firm up, silver could be next to explode. And it's not just the metals. The miners, the companies pulling these precious resources from the earth, are moving too. GDX and SALJ, key indexes for gold and silver miners, are climbing. These aren't just random pops, they're technical patterns, bull flags, ABC corrections, Fibonacci extensions, all pointing to one conclusion: the bull market is not over. In fact, it might be just beginning a new leg higher. Still, something feels off. While gold remains solid, much of Wall Street is chasing excitement. Investors are piling into high-growth tech stocks, into speculative assets, into Bitcoin, and ETFs like ARK, ignoring warning signs flashing across broader markets. It's a pattern we've seen before: a sudden rush of euphoria followed by brutal corrections. But those few who are watching gold understand what's happening. Money is quietly rotating toward safety, toward value, toward something real. And this brings us to the real twist. Despite calming tensions in the Middle East and cautious tones from Federal Reserve Chair Jerome Powell, the markets are entering dangerous territory. Equity markets are hitting nominal new highs, and investors are unsure: is this a breakout or a bull trap? Is this the start of a new rally, or a carefully timed fakeout designed to flush out short positions and lure in late buyers? Vermeulen warns that we may be entering a classic trap: a 5 to 8% equity rally followed by a swift and painful reversal. It's happened before, and if history is any guide, it could happen again. He points to familiar chart patterns: dead cat bounces turning into double tops, key resistance levels being tested, and market sentiment shifting dramatically. Meanwhile, the US dollar is under pressure. It's trending downward, testing long-term support, and showing signs of weakness. If the dollar breaks down further, that could be the spark that ignites the next gold rally. Pair a weakening dollar with rising uncertainty, and suddenly the $3,750 target for gold doesn't seem so far-fetched. And if silver clears $38? Well, the 2011 highs could be back on the table. In many ways, this moment feels like a crossroads. The stock market looks euphoric, even reckless. Retail investors are pouring into volatile plays, trying to make up for missed gains. Meanwhile, gold is steady, patient, and technically strong. It's been through this before. And as Vermeulen notes, gold doesn't need to react to every headline, it just needs time to consolidate. Once that phase ends, history suggests the next leg up could be sharp, powerful, and sudden. What's more, the macro backdrop is aligning. Rate cuts are now being priced in, with futures markets showing an 85% chance of a Fed rate cut in September. More dovish tones from central banks and signs of inflation easing are setting the stage for a monetary pivot. As interest rates fall and liquidity returns to markets, precious metals stand to benefit massively. That's not a theory, it's what history shows us every time the Fed turns dovish. And yet, most investors are still asleep. They're ignoring the signals. They're focused on the wrong headlines. They're piling into stocks that are already stretched, trying to squeeze out the last few percentage points in a market that's already flashing red. But the smart money? The strategic capital? It's watching gold. It's watching silver. It's watching the miners. And it's preparing. Vermeulen, like many seasoned analysts, is bullish, not just mildly optimistic, but strongly convinced that precious metals are about to enter a new phase of growth. He's holding physical gold and silver. He's not just trading for the short term. He's investing for the long haul. And while short-term traders may jump in and out, the long-term trajectory remains clear. What makes this moment especially critical is the convergence of technical analysis with macro fundamentals. When chart patterns align with central bank policy shifts, and when investor sentiment flips from greed to fear, the resulting moves can be explosive. This isn't just about price predictions, it's about understanding market psychology. When gold gets boring, silver gets exciting. And when both metals move in tandem, with miners leading the charge, that's the signal that the market is shifting. Even now, with equity markets flirting with all-time highs, Vermeulen is cautious. He's not chasing the rally blindly. He's following the charts, recognizing that we could be witnessing either a breakout or the final gasp before a reversal. That's why he's positioning carefully long on key indexes, long on Bitcoin, but always watching gold. Because gold, above all else, is the truest barometer of global sentiment. If the equity rally proves to be a trap, if the ceasefires fall apart, if inflation data surprises, or if the Fed changes course, precious metals could surge. And the fuse is already lit. The technicals are strong. The fundamentals are solid. The sentiment is shifting. We're on the edge of something big, and once it begins, the window to act may close quickly. So what will you do? Will you chase the trends, or position ahead of the curve? Will you wait for headlines to tell you what's already happened, or will you prepare now, before the crowd catches on? History has a funny way of repeating itself. And those who wait too long often pay the highest price. If this video resonated with you, share your thoughts in the comments below. Let us know where you think gold and silver are headed next. And most importantly, make sure to subscribe to our channel and turn on notifications. We're building a community of investors who see through the noise, who think long-term, and who refuse to be caught off guard when the next big move hits. Thanks for watching and stay prepared.